Hi guys, this is Dan from the Investment ABC, and in this video I'm gonna tell you why I think this bull market is a super bull market and different to other bull markets in history. Here are my thoughts about why this bull market is different and also unpredictable. Number one, it is the longest bull market in history with 10 years. I can't believe it. We are really 10 years into this bull market, and there are some signs that this bull market is fading and maybe rolling over, but I'm not 100% convinced about that. Number two, it is the most hated bull market maybe in history. I think every month, every week, every day we hear about, like, from crash gurus that, oh, the stock market is crashing, the stock market is crashing. These guys, they came out even like from 2009 to until now. I hear them saying the stock market is crashing. And if you would have listened to these guys, you would have missed on so much money and so many gains. You should always think for yourself and don't listen to crash gurus. They're always there, and they always talk about crashes. Um, this bull market also has, I think, really this bull market has like very few retail participants in it. Like, most of the stocks or most of the driver, it's not the retail investors like you would think that in the end of a bull market, but the companies and large corporations who buy back their own shares. And I think most of the retail investors, they got burned in 2000 and 2009, and they don't trust the stocks. So until now, they didn't fully jump in, and mom and pop, they didn't get tips from the neighbors, and the shoe boys giving tips to the hedge fund manager. No, this didn't happen. This kind of FOMO and frenzy that happened in 2017 in the crypto market. But actually, if you look around and ask your friends who owns really stocks, it's not that environment yet. And like I said, this number three, this bull market, the companies, they did a lot of like buybacks of their own shares due to the low interest rates. And this is also like why this bull market is so strong. But it's a double-edged sword. When interest rates rise, the weak companies, they will get problems. The rising interest rates, it will hurt these companies, and maybe these companies, they will trigger the next crisis. We have to keep a close eye on that. And yeah, these statements that I did so far, these are why I think this bull market is really different and also unpredictable. There are reasons and arguments to believe that the bull market is over, and that we will not break the double top that I show you in the Dow Jones Industrial Average, that we don't break it to the upside. But on the other hand, there are also some points which suggest that this bull market has still some steam left. I will give you some arguments for and against the ending of this current bull market. So on the left side, there are the arguments which suggest that the bull market is over and we're heading into a bear market. So number one, this bull market, like I said, is the longest one in history, and every 7 to 10 years, a recession hits and the stock market is rolling over. So we're definitely overdue for that. Number two, the Fed entered the rate hike cycle, and yeah, they continue raising the rates. And I think the Fed is like a machine for transferring the wealth from the middle class to the really like uber wealthy, and they keep on rising the rates until they trigger the next crisis, so they have a reason to lower the rates again. But definitely they will continue, and they will trigger the next crisis. Number 3 is the record levels of debt in the system, and like everyone, look around, everyone is drowning in debt because the interest rates were so cheap. The governments, the corporations, even the private sector. So this is very dangerous, especially with the rate increases. This might trigger some form of cascading effect. Number 4 is one of the most important factors is that the 10-year treasury yields, the bond yields, edging higher and higher, and competing again with the dividend yields. So in some cases, the 10-year treasury yields are higher than the dividend yields of the major companies. So normally when that happens, the money will flow from the bond market, from the stock market into the bond market to have some safe returns. But yeah, we have to see. And exactly on the other hand, it's the opposite. Whenever the stocks are getting higher and higher, the dividend yields are getting lower and lower. And at one point, the investors will say, "Hey, why wouldn't I go into bonds? I will get higher yields with less risk. It's just too expensive right now." So these are the arguments why I think the stock market rollover, stock market crash might happen. But on the other hand, there are also some reasons to say, okay, maybe it still has some steam left. Number 1 is what I said before. It is really one of the most hated bull markets, and until now, the retail investors are not there. Normally, what happens is when the retail investors jump in at some point, they create this last parabolic move in which the smart money and all the ones that bought cheap can dump their shares to mom and pop. And this is something we did not see so far. So it might suggest that we will see one major leg up to the upside. Maybe it's still going 1 to 2 years or 3 years, and in which that phase will happen, and mom and pop will jump into equities, and like always. So we have to see. And also one other very, very important factor is that investors, or big money, they feel that it's not safe to be in government bonds or to have their money in the banks. They just think that the next crisis might trigger some systemic risk, and will trigger the fall of the whole financial system. And in that case, it is better to have lost 90% of your wealth than 100% when you put it in the bank and the bank goes bust. You lost 90% of the share value or your property value, but over time that might recover. I think this is one of the most important reasons why the stock market is so unpredictable and not comparable to other bull markets. If this wasn't there, and we wouldn't be so far in the end game of the system, I would bet my house on it that we would see a stock market crash in 2019, somewhere there, maybe in October or December, somewhere in 2019 we would definitely see a crash. So what I did so far, I sold 70% of my stocks in 2018 and went into cash, because I think this time is different. Is like a saying that might be very expensive. What I feel is that, or what I guess, no one knows, but I feel that it's gonna be the same thing, that the Fed will continue to increase the interest rates, and this will trigger some crisis. Like I said, that it might trigger that like weak companies default, and also like maybe some emerging markets, they can't handle the pain anymore, and like some major default, which will create another crisis, and which will give the Fed another reason to decrease the rates again. This is what always happened, and I think even this time we will still have one more shot of the Fed, and maybe after that the Fed can't do anything about it, because the interest rates are too low and they can't raise it anymore. And yeah, maybe that one is the big one, but I think one more time we will see a crisis followed by by decreasing of interest rates. And that's about it. Like, these are my arguments for and against this current bull market. And what I also wanted to tell you guys is that my purchase of the put options with the ticker CA430, it was timed perfectly, and I bought 2,752 shares at a price of €1.09, and currently I'm up like 14%. But I think, I don't know, like I think this option has still some more potential to make gains. So what I will do is I will place a sell limit order at €1.10, and I will still keep my option, because I think maybe in the next 1 to 2 days we will see the 25,000 on the Dow Jones, and at that time I'm thinking to sell. But if we bounce earlier, and if we go up, I have this sell limit, and I will not lose any money on this trade. So it's just a gamble. Either I'll don't lose anything, or I make another like 10-20%. And if I sell, like when I sell, I'm gonna definitely update you guys. Thanks guys that you listened to this video. And in the next video I'm gonna tell you my strategies to make how I make long-term and consistent gains in the stock market. So just join in and have a look at that video too. I hope you like this video. Press subscribe and give me a thumbs up to support this channel. Thanks guys, and see you soon.